Well, hello, everybody. We're back again with a second episode here of the Beyond the Dirt podcast. And today we're joined by Chris Wearmouth, one of our land specialists here in central Iowa. And we're going to dive in a little bit today. We talked a little bit about land as an investment, and we're going to dive in a little bit more into that today on this episode. So, like I said, joined by Chris Wearmouth here. Chris, do you want to introduce yourself?
Yeah, my name is Chris Wearmouth. I live here in Adel, Iowa, to be central Iowa, and I serve most of central Iowa for any land buying and selling needs. And been here almost all my life. Did a short stint in Omaha, but I know the area well and well versed with the market here.
Yeah, so like we kind of talked about here last week when we're talking about an investment, especially in land, when you're kind of talking with your investor clients, somebody that's looking at land as an investment, what's I guess typical return that you kind of see or kind of recommend when you're speaking to some of those clients?
Yeah, just on land that's non-productive, I think a good rule of measure is probably about 5% a year. Lately we've been, last couple years we've been up in the 20s and even higher in some places. And through the, last 10 years, there's been years where we've gone 8, 10%. But I think 5% a year is probably a good number to use when you're looking at land as an investment over the long term, 30, 50, 100 years. So um, if it's something that's got some production on it, you can expect maybe another 2.5 to 3% return right now. I think if you're an investor and you're getting over that, you're probably doing pretty well just based on ROI, how much you've got into the land. In the past, I've seen some stuff as high as 4 and 5% return, but we just aren't seeing those types of numbers the past 5 years.
So I guess when we're talking about the land and different types of land as an investment, I guess what are you recommending as far as the types of land where it might be farmland or maybe a CRP income type farm. What do you see as far as the differences in those types of land and maybe the benefits in one or the other?
Yeah, I mean, there's a lot of different types of land investment you can get involved in. From the farm production side, obviously you've got your standard tillable ground, corn and bean production here in Iowa, and you've got pasture ground or hay ground. Those are some income producing options. Those are probably a little bit less return, considerably less. But if you're buying it to use it yourself for that type of investment, then the returns will be a little bit higher. But just for someone coming from the outside in, want a place to put their money, it's definitely going to be a little bit less than what that crop producing ground is going to give you. And then the third class is probably that commercial development ground type of tillable or just ground that's close to any major developing areas. Obviously, those returns can be pretty variable, but most likely after 20, 30, 50 years, going to be much higher than maybe just your average yearly return off of crop ground. And so when I'm talking to my clients, I think it's good to have a mix, of CRP and tillable. Not everything needs to be tilled. You can get some pretty good returns on CRP in certain scenarios, certain programs. So that's something that you'll just have to talk with your FSA office about. But there's definitely farms out there that can be strictly all tillable, and that makes sense for that farm. So it just kind of depends on the piece that you're looking at, and how much work you're planning on doing or want to do. on that farm.
No, it's a good point, and I think like what you said was a really good point. Was just being diverse, where having some farmland and also some CRP income as well. But you brought up another good point. Is you're starting to see some of this. These farms that are kind of transitioning into more commercial development, and it's kind of interesting to see on how some of these, I guess, towns. You said you're from Adel. I'm sure you've kind of seen there in that central Iowa area really expand, I guess, over the last few years, and so, some of the values that some of these farms are bringing, just you probably would have never imagined, 10, 15 years ago.
Yeah, and I think a lot of the early investors, and I'm talking like probably 30 years ago when they were buying land, maybe around Des Moines or in other metro areas. They're probably the ones that are profiting at this point. I think what we're seeing getting bought now as far as development ground goes is more by maybe some investment funds, or people that are moving 1031 exchange money. Yeah, there's, opportunity out there, but it's probably going to be further out than where you're thinking today. When you're looking at development ground, you got to think, 20, 30, 40 years in advance, because the guys that did that 30 years ago are buying the stuff further out now. And that's all speculation really, right? Because they don't know what's going to happen. But, in the meantime, they can get a good return, and a hedge against inflation, especially right now. And so that's working for them.
No, for sure. And I actually had a conversation with a producer this morning, and there's an auction kind of coming up here. And he kind of reminisces that he could have bought the farm, 15, 20 years ago for 3,000 an acre. And, at that time thought that was, quite a bit for that time. And, now looking back at it, heck, you wish you could buy the whole county for 3,000 an acre, but that's just part of the inflation and kind of where the market kind of goes. But I guess maybe this brings to the end point, Chris. I know we talked a little bit about with Chris Janis last week, but where do you, I guess, see this market going as far as we just had the RLI survey come out here, 2 weeks ago. What do you kind of see that might have some folks kind of maybe uncertain, or maybe as a buyer perspective, maybe wait off, and you might be able to get into something here in the next couple months or years?
Yeah, I mean, I've been getting a lot of questions lately from buyer clients, asking me what I think and if I think the market's going to move down here in the short term, or maybe in the next year. I still believe that, we're at such a short supply. There needs to be a significant amount of volume to move that needle, especially in those properties under 500,000, and even 300,000. In those properties that are maybe a little bit more high priced, more ground, not as affordable for everyone, you get into a different tier of buyers. You may see, some of those interest rates start to impact. I think we hit 8% today.
Mhm.
You might see some of those interest rates start to impact that higher priced ground. It's just not going to be quite as competitive. So you may see a 5 to 10% drop, maybe 15% over the next year, in some of those bigger pieces of ground, those more continuous tracks. But I don't think you're going to see more than maybe, it's going to be less than 5% on a lot of that smaller pieces of ground. Yeah, just moving forward, I think, if you're looking to buy and you've been looking at the market and waiting for something to happen, something where you can maybe see an opportunity. The best time to do it is just as soon as you can, or as soon as you're comfortable affording it. Because, if you wait, it seems like most people I know, I've had buyers that I've, contacted me 2 years ago and still haven't done anything, just waiting for that right thing. So, the longer you wait, the less likely it is that you're gonna buy something. Most likely you're gonna end up putting that money somewhere else, whether that's another investment, or maybe you're gonna go on a, big elk hunt out in Montana or something. So if you're looking to buy something and you've got that itch, and you should probably scratch it, because there's just not a lot of opportunities that come up, and the price is really only going to move up over time. So, longer you wait, the more you're going to pay.
No, that's a really good note to end on there. So, well, I appreciate it, Chris, for hopping on, and hopefully you guys found some enjoyment, some information out of this podcast here. If you have any questions, go to our website, or you can contact one of us directly. Appreciate you guys tuning in.